I'm in my reboot bag again. If you look back, there's a video where I talked about having life insurance strictly from your job and why that's not a good idea. So this time I'm here with an example. Follow along, people. You're not gonna want to miss it. What's going on? Hey. I wanted to try that. It's probably not gonna work, but whatever. Welcome to another week. It's another Tuesday. Me and you in a lecture. We gonna talk real quick. I'm not gonna hold you long. Just hold on with me while I tell you that if you have life insurance that is strictly from your job, you are in danger. Now, you may not be in immediate danger, but it's one of those things where I would implore you to have something independent of what your job is giving you, primarily because, they get up and decide one day, when they're going over the budget and the numbers and things like that, they just say, we don't need this life insurance. These are adults. They should have their own life insurance. So we're gonna get rid of that part of the benefit package. And for a lot of people, them cutting that kind of thing out their benefit package is the difference between them having their own life insurance money and having to establish a crowdfunding source if something were to happen, right? And there is a grand example of this that is basically floating under the radar unless you're in the know, right? So there was once a company named Sears, right? Nationwide, Sears is basically a relic. It is a memory at this point. A lot of us remember Sears as a place where you maybe could go get you a lawnmower or some appliances. They might have been a little bit higher, than everybody else, but it was Sears, and they were steady, they were sturdy, it was all good, right? So Sears had their retirees with some of the nicest retirement benefits, and by them having said retirement benefits, in the end was basically the nail in the coffin for Sears as far as trying to remain a profitable company, right? So they were trying to do well, to do right by their retirees. And by doing this, of course, they offered them company paid life insurance. And by them doing this, that means that they were pretty much funding this kind of thing. You didn't really have to worry about it. They gave you so much. There wasn't really coming out of your pocket as far as coverage is concerned, right? So this is from a company that these people, gave their blood, sweat, tears, time, effort. They gave everything for Sears. And so they were, just reveling in the retirement benefits. And then they just woke up one day and Sears said, hey guys, we're going to have to cut your life insurance benefits, right? So a lot of people took a major hit as far as life insurance is concerned, right? And the bad part about it is, of course, these are retirees at this point. If they didn't have their own individual independent policies and they were depending on Sears, now they've gone from being able to put themselves in the ground or commit their body to whatever, disposal, or however, I don't know the nice way to say it, but their method of handling their vessel, they can't do anymore because their life insurance policy is basically $5,000 at this point. So there are people who don't want to be cremated or can't stand the idea of being cremated. So now that's what you got to do unless you have your own nest egg. But again, if you look at the numbers, what retiree really has just all kinds of money like that to be able to be like, well, we'll just make it up here, or we'll make it up here. So there are a lot of people right now with Sears fund. Well, they used to have Sears funded life insurance policies that either don't have enough at this point or they don't have it at all. And at this point now, for them, they're older, so if they were to get a policy, there's a chance that either one, they're too old for whatever company that they're looking for, or if they are able to get a company to look at them, it's going to cost them way more than what they are used to paying for, which they probably weren't paying for too much of anything because they're older. They probably have a couple of health issues that really weren't, a cause for them to be denied for the policy altogether. I mean, there's a whole list of things. I'm going to include a link for a story so you can read it on your own. But in a nutshell, I really just want to make sure that I'm saying this, and I'm saying this clearly. If you just have a policy through your job that they're paying for or that they control, that you don't have ownership of, you need to have a policy independent of your workplace. Because even if you were to be that kind of person where you're saying, well, hey, not only do I have the policy that they gave me for free, they also gave me the option to get another policy and just pay a little bit more for a higher face value, right? If they still own that, if you don't have like the paperwork and the documentation for said policy, it's not yours. The company owns it, and they can do whatever they want to do. So you don't want to be at the mercy of your employer. I'm sorry. Like I'm really harping on this because it's a thing, right? So again, don't just depend on those kinds of policies from work. You need your own. You need your own. You need your own. It's serious, bro. It's real serious. And again, just make sure that you're liking, subscribing, and the notification bell on. And we'll be back with another week next week. Have a good one.